Hello, everybody, and welcome to this week's 5-minute Chicagoland real estate update. I'm Joe Enzbigilis with the Enzbigilis and Tierney Group of Keller Williams Experience, and I am extraordinarily grateful to be here, earning my spot as your economist of choice for the Chicagoland real estate market, which the Chicagoland real estate market is off to an incredible spring start. The spring market came on really fast this year in Chicago. It's here. And it's here to stay for a little while. Give you an example. I listed a home for sale on this past Thursday in Plainfield. And by Sunday, we had 49 showings and 7 offers on that property. We also had 2 open houses that we held on Saturday and Sunday. And we had an average of about 30 people come through each on Saturday and Sunday, on top of the 49 showings that we had. So needless to say, we have some very, very happy sellers for that listing in Plainfield. This is the story a lot around the Chicagoland real estate market right now. And there's some economic factors that are playing key roles in the state of our market. So I'm going to take a few minutes to go through those things and give you my opinion of what this first quarter is going to look like for us here in Chicagoland. So the Fed took some drastic efforts to ease inflation in Q4 of 2022. Okay, they raised the interest rates, which affected the mortgage market. Mortgage rates went up to 7.5% within like a month and a half, and they took some other efforts to ease inflation in other sectors like energy, goods and services. And it was a fast move, a drastic move, and it had a fast effect. All of those metrics that we track to keep an eye on the globe, the economy in general, they're all trending back towards the baseline. So mortgage interest rates are directly affected by what the Fed does with interest rates. So mortgage rates we're seeing sliding slowly back down. They're right around the mid 6s right now, which is a really healthy place to be, considering that the historical average for interest rates, I believe, is 7.1% over a long period of time. So we're in a healthy spot with interest rates, and as a result, buyer demand is spiked through the roof. So we've got the perfect storm of extraordinarily low inventory, in fact, historically low inventory. Most of the collar counties around Chicago are seeing inventory somewhere around about a month's supply right now. So let's give some perspective to that number. We consider 5 months of inventory to be a balanced market. We consider anything less than 5 months of inventory to be a seller's market, anything above 5 months to be a buyer's market. So we are in the thralls of a serious seller's market in Chicagoland right now, evidenced by the extraordinary number of showings and people showing up at open houses and offers on listings. Really interesting metric that I was looking at this morning is the rate of available homes that are under contract in DuPage County is at 15%, which is the highest it's been in a long time. And in most other collar counties, it's somewhere between 9 and 15%. With 1 month or so of inventory available. So this increase in demand that's sparked by mortgage interest rates on the slow decline, and buyers becoming okay with these interest rates, it's the new normal, along with low inventory, and we've got the perfect storm for a seller's market. I believe that this seller's market is going to last us through Q1. And I think we might see some changes in Q2. So if you're in the market to sell your property in 2023, right now is when we should be talking. This is it's an extraordinary market for sellers. The reason I think it might slow down a little bit in Q2 and Q3 of 2023 is because oftentimes when the federal government takes drastic action and achieves fast results towards easing inflation, we don't feel the pain associated with that for a few months. So, people have been complaining about gas prices. Our grocery bills are astronomically high. right? But it hasn't been sustained for a long period of time yet. So people aren't necessarily feeling the pain of all of these drastic efforts by the federal government to ease inflation yet. But I think come, late Q2, early Q3, if we stay on this trajectory of a really slow easing of these inflationary pressures, I think people are going to start feeling the pain a little bit more. I think consumer spending is probably going to go down. Okay. We talked about how we had a recession in the housing market since about August, from August to about the end of December. But the recession in the economy is still looming. And, it's likely that we're gonna have some sort of economic recession outside of the real estate market going into Q2 and Q3. So I think that will put some downward pressure on the housing market, which is why I think this next 2 to 3 months is the best opportunity in a long, long time to sell your property. And on the buy side, just keep in mind that interest rates are coming down. So interest rates as of this morning, most banks were at about 6.7%. And the historical average for mortgage interest rates is 7.1. So we're back below that historical average, and buyers are adjusting to that being the new normal. It's still a good time to purchase a home. You're going to pay top dollar likely if it's a nice property that's priced correctly, but your interest rate can always be refinanced. So if you're worried about that 6.5 or 6.7% interest rate, you can always refinance when rates come back down. So that's the synopsis of where we're at with the Chicagoland real estate market. We're extraordinarily grateful to be involved in this market. I think there's a lot of opportunity out there for everybody. And we're really grateful to be here for you. We're here to answer any of your questions. Please let us know if there's anything in the world we can do to help you navigate this market. Talk to you soon.